Hey everyone, welcome back to Corporate Decoder. First, VGZ Vista Gold Corporation just filed its quarterly report for June 2026, and we are seeing a big cash infusion alongside persistent losses. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is essentially trying to fund a massive project with market cash, and the latest numbers show a concerning imbalance. Vista Gold is a gold mining company, but right now it is more like a project developer. They do not currently make money from actually digging gold out of the ground. Their main focus is their Mt Todd gold project in Australia. Let's dive into the numbers. As of the 30th of June 2026, Vista Gold had about $49.5 million in cash. That sounds like a lot, but when you look at their liabilities and equity, you see where the money is going. Their total assets are just over $52 million, but a big chunk of that is in common shares and accumulated deficit, which means they have lost a lot of money over time. Their total liabilities are around $1.5 million, which is relatively small, but that accumulated deficit is nearly $474 million. This tells us they have been losing money consistently. Looking at their income statement, their net loss for the 3 months ending the 30th of June 2026 was about $3 million. For the first 6 months of 2026, that loss grew to over $6 million. This is a pretty consistent trend, as they also had losses in 2025. Now, where does the money come from to cover these losses? They recently had a big stock offering. In March 2026, they brought in nearly $45 million before costs. This explains the jump in cash from just over $13 million at the end of 2025 to almost $50 million by June 26. However, this also massively increased their outstanding shares. Back in early 2025, they had around 123 million shares. By June 2026, that number shot up to over 145 million shares. This means each existing share represents a smaller piece of the company, which is called dilution. The company's big play is the Mt Todd gold project. They believe it has significant gold reserves and can be developed into a profitable mine. The latest feasibility study, which is like a detailed plan for building and running the mine, suggests they could produce over 150,000 ounces of gold per year for about 30 years. The initial capital needed for this is estimated at around $425 million. That is a lot more than the cash they currently have. They talk about capital efficiency and a benefit to cost ratio. Basically, they are saying that for every ounce of gold they plan to produce, the initial investment is about $93, and the projected long-term value makes a lot of sense compared to that investment. This sounds positive, but it is all based on projections and a gold price assumption of $2,500 an ounce, which is quite high. The costs to keep the project going are going up. Exploration, property evaluation, and holding costs jumped significantly in 2026 compared to 2025. This is because they are hiring more people, especially in Australia, and dealing with higher power costs for things like managing water at the mine site. There are also some big environmental and historical issues at Mt Todd. The Australian government is responsible for cleaning up the site from its previous owners, but if Vista Gold decides to move forward with mining, they might have to take on those cleanup costs, which are estimated to be around 73 million Australian dollars. This is a significant potential liability. And speaking of environmental issues, the weather has been a major problem. The 2025 to 2026 wet season in Australia was much wetter than usual, leading to a lot more water accumulating at Mt Todd. This means they have to spend more money and effort on managing that water, which could delay the project and increase costs. This is a new and significant risk they are highlighting. When we look at their cash flow, they are burning through money. For the first 6 months of 2026, they used about $4.7 million just for their regular operations. This is more than the $4.1 million they used in the same period in 2025, mainly because of those higher expenses for new people and site costs. The financing activities show the impact of that March 2026 stock sale, bringing in over $44 million. This is a huge amount compared to the small sales they made under their At the Market program in 2025, which brought in just over $800,000. Overall, Vista Gold is in a classic development stage dilemma. They have a potentially valuable asset in Mt Todd, and they just raised a significant amount of cash. However, they are still losing money. The project requires a massive amount of capital to actually build, and there are increasing environmental and operational risks, like that extreme rainfall issue. The company has enough cash to operate for the next year, but securing the full funding for Mt Todd development is a huge question mark. There is no guarantee they will get that funding on terms that work for them. Right before I sign off, remember that the tools I use to find and analyze these filings are linked in the description below. They really help keep this channel going. That is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.